Is there anything better than waking up on a Monday morning and it being a synthetic Tuesday afternoon, folks? For us in the financial markets, a 3.5-day work week. Not many earnings unless you follow Constellation Brands, but we still got stuff to cover. Russell rebalance. Woo! Was there some fireworks on that? Bank stress test on Friday. Market up again. Where's the resistance? I don't know. But it's time for Statman Do at 8:35. Ryan Detrick, one of our great guests, will be joining us. Ratings. People have opinions on Circle now. Quiet period over. Folks, let's get things going on this Tuesday afternoon. Pre-market prep right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, bottom line, folks, continuing that rally from Friday up over 25 handles, 62.49. If you got to go to resistance, you got to go to the rolling front month contract. Well, if you're looking at your dollar, well, it's down again, down 25 cents, 96.87. TLT perking up here. TLT up 47 cents at 87.86. USO a little bit green, up 25 cents, 73.53. GLD up $1.78, 303. SLV the laggard, that's flat 32.70. Bitcoin futures up $935 at 108,420. We're gonna bring on Triple D here, and Dennis, some things we get right, and then some things we get totally wrong. And what we got totally wrong on Friday was it was Brent's birthday.
I know. Brentster, happy birthday, buddy.
Thanks,
we
buddy.
missed your birthday. I had no idea, actually. Anyways, we know now. It's been added into the calendar. 41 years old. The 40 puts go off the board worthless. Mr. Brent Slava. What'd you do? How's your birthday?
Birthday was awesome. Had a little house party at the house in Detroit. It was fun. Got a bunch of friends over. Stayed up probably too late, but I had the rest of the weekend to recover. So it was good. It feels good starting my 41st year. Thanks, guys. Appreciate the B-Day
Actually,
wish.
bad news. It's technically your 42nd year. You're starting your 42nd year. I know I hate the way that goes. Like I'm 49, but I'm in my 50th year. It kind of sucks because when you turn 41, it means you completed 41. So you're actually starting your 42nd year. So you're older than you think.
Thanks.
When you're born, you're 0. It sucks.
Well,
happy birthday, buddy.
Yeah, I kind of take responsibility because when we were driving home from Canada, it did come up, and we were driving and trying to send emails, trying to talk to people and stuff, and I never put it in my calendar, huh?
So
it is now in our calendars. We will never miss a Brent Slava birthday ever again. Happy birthday, buddy.
Thank you.
We have breaking news.
Yeah.
Breaking
some
news,
people are 41, and then some people act 41 and look 41. Go ahead, take it away, Dennis.
Breaking news: Home Depot to acquire GMS for $110 a share. The love triangle ends. We know originally we had QXO trying to buy GMS. Then we had Home Depot rumors they were going to buy GMS. It is official this morning. Deal announced: Home Depot to acquire GMS for $110 per share. I believe it is in cash. Looking through the PR right now. Transaction terms: $100.10. Yes, in cash. You receive the same $110 in cash. So it does look like it is in cash. Okay, so that goes off the board. Love triangle over. Home Depot trading slightly down on it. Just a smidgen. Obviously, GMS is trading up just under that 110 because now you'll have the time value of money in there, so you don't trade right to 110. And always risk of antitrust too, which I don't know if it's going to be the case, but that's why they never trade up to the price. And then QXO, which has kind of been all over the place, is trading slightly higher on this here now. Obviously, they're not going to be paying the premium. Was down on Friday as well, so bouncing back a little bit this morning. So that's the news on GMS. And also stocking deals, Juniper as well. We might as well cover it all here right now. Juniper deal getting approval here as well over the weekend. HPE settled their DOJ case, and the merger between Juniper and HPE can now continue here, and that is why you're seeing both Juniper and HPE trade up substantially here this morning. So Merger Monday, Joel. Merger Monday.
Yeah, there is Merger Monday. I'm just gonna I just want to look at this Home Depot chart, and if you're a Home Depot owner, you gotta be a little disappointed here. Looking at the market, a lot of things at all-time highs here, down a $1.44. I mean, maybe it wasn't quite worth well over 400 there, but it's been a laggard trade here. So with this deal, they're knocking a little bit off it. It looks like this 370 area has been pesky, at least going back since the first week of June. So couple up days in a row. I'd say if you're looking for more upside here, need to catch a 370 bid here, a strong bid. And Home Depot, let's just look at the Lowe's chart too. LOW. Whew. Boy, oh boy. These stocks out of favor. Where is the AI in Home Depot, Lowe's, or the Bitcoin play?
There's AI in other stocks here, and there's AI in Palantir, and the Russell rebalance provided some fireworks on Friday. We were trading it live in the STN room. We want to give a shout out to multiple traders who were covering as well. Emily in the STN room, JV Spec, Alan calling it out. We were looking at the small caps that were going in, but then, there's some mega caps that were really moving here. They were calling out Palantir, and they're like, Palantir's tanking, huge sell imbalance, over 1 million shares off the Russell. And the stock went straight down from 138 all the way down to 130.74. I bought the close. I know multiple other traders. Joe, JV, I think, was in there. Emily, I think, was in there. A lot of other traders bought the close as well. Immediate gratification. The stock started trading higher and higher. Those who held for through the weekend are making even more money, though, because this stock is now up almost 5%, 4.5% from the Friday close where it got smacked around. We talked about the fade trade being the way we trade the Russell rebalance. Yep. That's exactly what we were looking for, was big moves to fade them, meaning buying dips, selling reps. So there was three main ones. I bought Palantir. AppLovin also we bought. That went from 345 down to 333 in the final few minutes. That has bounced substantially. It's up 7 points this morning. And then there was also Amazon from the short side. That went from 218 up to 223.30. Cover that after hours for almost a point in the 222s. But this market, it just rallies everything back. Let's go quickly to the Palantir chart, though, because this was the one that everybody was talking about. Even Kramer giving it a mention after the fact. We were mentioning it before, though, and during it. So obviously, in the STN room, we were all making some money from that. But Palantir, I mentioned that as well. Getting the bounce trade, 2.5 million shares already here this morning. Can't keep a good stock down.
And I probably say this every time because it's just, I can't believe that orders. I can't believe the orders go in, that they have to do that in order to be in an alliance with the ETF. I mean, just throwing away so much money, but you need that closing print, right? That's what you need. That's what you need for the mark. So I saw it. I didn't know. I saw it. I'm like, wow, that could be rebalanced. I didn't know if there was any kind of news on it, but man, we stressed about trading it from from the fade side, and wow, I can't believe that stock would drop that far. Got an immediate rebound. I know some people are still holding over there in the STN room, so good for them. So wow, what a nice reversal of that bar. Let's just talk about Amazon. Oh, you said Amazon, that you covered it right away. I mean,
a few minutes after, yeah. So if you look and bring up the chart from Friday, it closed at the highs, ran up like $5 in the last few minutes, and then it did indeed sell off. We were able to cover it, and I covered in the 122s. You can see it pulled off fairly significantly there. Over $1. And then this morning, just everything's rallying. So it's back up here. But I'd be careful. I wouldn't want to chase Amazon here this morning up, because there's about 5-6 points of fluff in here from the Russell that it's still tacking on. You can see the other things. But again, silver lining market, so they buy back the ones that dip and they don't sell off the ones that rip. That's just this bull market in a nutshell.
Okay, it is the end of the quarter. Window dressing. I guess some people are going to have to dress up their portfolio if they didn't They didn't participate. You don't know what happens at the end of the quarter. Money managers, they want to dress up their portfolios. Look at me, I own Palantir. Look at me, I own Nvidia. And then the other things, like some of the dogs, like, yeah, I got rid of X, I got rid of Y, I got rid of Z. So I guess the chase, if you're not in these stocks trading at all-time highs, is in full blown here for the end of Q2.
Yeah, well, this is what window dressing is. It's the strong get stronger and the weak get weaker, typically on the last day of the quarter. That is exactly what we are seeing here this morning, with some of your leaders really strong here. Obviously, AMD has been a quarterly leader here, big time here, having a great morning. Nvidia continuing to go higher. A lot of your tech stocks continuing to go higher. So that's, kind of the trade for that. We'll see if that does materialize at the end of the day. Also, as much as, we play the Russell rebalance, the fades on the close, I'll be doing the same thing with fading the close at the end of the quarter. We'll be doing that tonight live in the STN room. So just as much as I said it would be a good day to do a free trial of STN on Friday, and obviously STN room made a lot of money, maybe it's going to be a good day tonight too. I think we'll get some fade trades off the end of the quarter and off the window dressing there tonight in the STN room as well. But, there's other news here too, Joel, so I'm not just going to go through the quarterly stuff. There's so much stuff to cover here. Bank stress test Friday.
Yep.
Like Friday was full of so much news between 4 and 5 o'clock. So we just we missed the bank stress tests here. They all pass. Spoiler alert, of course they all pass. It's just what they do. The buffers have all come down substantially enough that they all pass anyways. But some did better than others. Goldman Sachs is trading up 25 points here this morning on its stress test. We were trading these live Friday night as well. Huge moves. All of them are up. I was concerned because Citigroup and Morgan were lagging. And I'm like, I've seen some go down before, so we were cautious on those. Well, they've all went up now. So Goldman Sachs leading the charge up 3.5%. Wells Fargo number 2, it's up 2%. Bank of America up 1.4%. JP Morgan, Citigroup, all trading higher. If you're wondering why, it is definitely off the Friday stress test results. Why is it significant that they passed? Because then they can change their capital allocation plans, can do more dividends and potentially raise the dividends and potentially do more buybacks. Those sometimes follow, fairly quickly. So keep an eye out for after hours news, not necessarily tonight, but coming in the next, week or two, where you could potentially see some of these banks increase their buybacks or increase their dividends. And that's what the market's anticipating and why they're buying Goldman Sachs up the most here this morning. So maybe start with the technicals, Joel, on GS.
Oh, really? What technicals? So it just hit blew away the all-time high, which was made on Friday. So if you want to call old resistance new support, you can. It's a soft number. You would need to come back to 694.20. That was the top of Friday's range. I think someday it might come back there. I don't know if I'm going to predict it today, but that would fill the gap. Even though, look back in May, it had a gap and go, and it never came back to fill it. Right now, the pre-market high stands at just over 715, 716.20. I mean, it's a big move. I mean, if you have targets up in this area, 714, 715, go ahead and take them. 715 gives you 720 if you want to go on to Kenny Glick. If you buy this thing off the open and you think this is like the world's greatest trade here, being long, going with the momentum, let's say you open 714, you go up to 716, nice little pop off the open. I would just be careful if it came back down through that open from the long side. And if you'd like to try stuff from the short side, maybe you could look at it that way. But 38,000 shares have traded. Big move for Goldman Sachs. So,
hard to chase when something's up this much. And, we didn't hear anything about new capital allocation plans yet. It's all anticipatory traders coming in here, obviously speculating that they're going to raise the dividend or do a huge buyback. So hard to chase all these banks. But again, with that potential news, I'm not sure I necessarily want to short it either. So maybe you're just sitting it out. Maybe you're waiting for a dip to buy back in. I do think there's going to be a pop eventually on some capital allocation, but maybe we get a dip before then too. So
was
that's
there
kind of how
anything
I'm
bad?
approaching it
Anything bad that anybody?
here.
Wow,
No, any bad news, Joel, stocks don't go down on bad news anymore. So the big beautiful bill is now it looks like going to pass. We're getting more details in there as well. So there is some bad news for some solar stocks in there. We talked about that before. ENPH is trading down. SEDG. I'm trying to find you bad news, Joel. Okay. ENPH is trading down. SEDG was trading down, but it's moved higher. But even though, First Solar was in this big, beautiful bill, and originally they really sold it off. Remember, it was down huge on it. Now they're actually looking, inside this bill. And I knew the New York Times was talking about this as well, that this bill may not necessarily be bad for
solar.
Knockout Trader summarizes it very well. He's on Twitter there, so I'll give you some shout out there. Knockout Trader said First Solar, and he's just interpreting this, so he said, he could be wrong, but First Solar appears to now qualify for stacking opportunity because they accomplish all the following requirements. More than 65% of the total direct material costs are U.S. sourced. They make most of their stuff in Ohio. And the components are integrated and domestically manufactured. So, and then some of these parts can receive up to 45 times manufacturing credit for most of those panels. So that I didn't verify this either, but it was summarized nicely. And also the New York Times has an article on it as well. And that's the reason that First Solar is actually trading up significantly here this morning. So it is up 8% as your big winner of the day. So even the big, beautiful bill, which was originally thought to be bad for First Solar, now appears that it actually might be good for First Solar. Full disclosure, we are long First Solar in the long-term account. I am long it. So good news. I don't intend to sell it here today, but nice to see a big pop in my stock.
Hey guys, popping back in here real quick just to jump back to something on the Russell stuff that I forgot to mention. And actually, We're getting press releases right now, just happening, like NUKK. This is why I was reminded. But we're getting these companies that were added to the Russell on Friday that we knew were going to be added to the index already. We already had the full list. The corporations are putting out press releases here this morning. Like NUKK just put out a press release that says that they're added to the Russell Microcap Index. There's bids in Nuke right now. I just watched the thing go up 50 cents. So this is my warning. This is information that we already had, folks. You're going to get a lot of these press releases today. I just saw NVGS also added. TRUG also just added. Just something to keep in mind here, folks. Wanted to give a little warning.
So what happens is all these stocks got added on Friday. The list was right out there. We actually talked about a lot of these stocks, because I had my own list there. So we knew that they were already added. What the companies do is they want their stocks to go higher. So they come out with a press release and actually say it in a press release because they know the algos will buy it up on that. Oh my goodness, the algos are stupid. They don't even realize that they were all added Friday and we already knew this information. They just see, bang, that's a positive headline. Oh my goodness, added to the Russell right there. Nucleus added to the Russell Microcap Index. And then she pops up. So that's welcome to algorithmic trading in the year 2025, where they'll re-release the same dang news that we already had, and the stock will go up anyways because the algos are too stupid to realize that it's already read up on this. Now, this market, who the hell knows? Like sometimes they don't even sell them back off. We're just in a bull market. So it's a hell of a lot easier to buy dips and sell rips. But it's such a great point that Brentster is making here. How many other of these companies potentially might come out with these PRs that they were added to the Russell on Friday? Just want to let you know we were added to the Russell. Just want to let you know. Don't forget. Hey, buy our stocks, algos. We're added to the Russell.
Okay.
Promotional to say the least.
Yes. JLEX 7032. Oh, we're back with the numbers again here. Where do you we won't go into that whole rant again.
That was for Friday.
Money Mitch 6269.
Okay.
Brent did a really nice, was it last Tuesday you did your little tutorial on news digging 101?
Yes. Yeah. It was Tuesday, and we had so much information that we decided that was only part one, and we're going to do another one tomorrow. We have educational segments at 10 a.m. in SCN. We pick a different topic. We take suggestions from the chat, and asking about news was a good suggestion. So we're going to do that again tomorrow. Part two, I'll have a little presentation. That's right, Mr. T, a little presentation for you. And JLEX, I think Dennis maybe was asking toward a question you can answer. Where did you get the information on Russell? It was just on the Russell's website, right?
Yeah. You can just go Russell Reconstitution. I printed it all out. So here is your list. So we're not talking 1 or 2 stocks. There's like 1,000 stocks here that were impacted. There's
JLEX, were you referring to Dennis's information or Brent's information? Because I got Brent's information.
There's like 20 pages and there's like 50 stocks on each page. There's a lot of them there. So I printed them all out. This is how we were approaching to the trading on Friday. Not a lot of these had huge moves. Some of them had intraday moves and they were tracing, but these are ones that could potentially on the additions. There's a pile of them on here that could potentially have, press release. Now, the problem is like needle in a haystack because most of these companies aren't going to issue a press release on this. But, like Aqua was added, for instance. There's other stocks that were added on Friday. And you're seeing a lot of those stocks actually trade higher. So there's probably some bounce back trades here too. The other thing which we didn't talk about was the potential is some of the deletes would probably have pressure on them ahead of it. That pressure is now gone because they've been officially deleted. So you could see maybe companies even like Lunar, which I am long, maybe being held down because it was delete. So now all of a sudden it's like, release that pressure from the ARBs that are coming in to sell it is now gone. They don't have to sell it anymore. It's already sold. So, Lunar's up 3.5% here this morning. I wonder if it's just that release of the pressure here. So, keep that in mind if you're shorting stocks like that. I would maybe be careful, just being if you're still short all the deletes, maybe it's a little bit long in the tooth here now. Sometimes it's not a bad idea to be long the deletes even for swing trades afterwards. So lots of trades off this Russell.
And not to get us distracted on this topic, but this was a huge topic from last week. So why not? JLEX was asking, do all the ETFs and indices report this information, Dennis?
Well, Russell rebalance. So the Russell's the only one that did the rebalancing. S&Ps do their rebalancing, at different times. So this was the only one that's the annual. So the big one is the annual, the Russell. So obviously any ETF that tracks the Russell is going to have to do adjustments. They're going to have to buy the additions and sell the deletes, which they've done already. It's over now.
Yep.
So, they would have done that on the Friday close. That's why the big moves happened on Friday. So now that we're past that is what I'm saying is that some of these deletes have probably had pressure on them from, anticipatory traders, knowing the indexers are going to have to come in and sell. We're probably short these things ahead of it. That is gone now. So sometimes like options, Monday, releases all of a sudden and opens up. So I just say that pressure, that selling pressure could be gone. Think about like Bezos when he was selling Amazon 200. Then he was done selling. Then the stock was allowed to rally. Same thing, where you've got maybe a list of deletes here that have been under pressure here and maybe tracking down. All of a sudden, some of those stocks can actually move higher because they don't have those anticipatory traders selling them anymore.
And I just want to give an illustration too of something that happened. And the reason it's important to follow these stocks after, whether they were addition and deletes. Remember the brouhaha just because Hood wasn't added to the S&P and all that anticipatory buying and how they hit it on that one. I think it was this day right here. They hit it for one day. It was the Friday. On that Friday, it was earlier in June. The stock, came down, boom, consolidated, hung out a little bit, and got rid of all those weak hands there, went back at that 85 level, folks. It was a good level. I know some people in the STN room have been using that as a target on the long side, also shorts. It's traded back up there again. All-time high, 85.55. The all-time closing high was made on Thursday at 82. Yep, Thursday at 84.52. So
let me find my list of deletes here. It's like I've already went through it here, but just to go through because I think there's some trades off here, folks, and I think we don't want to miss any. So I'm just looking at the deletes and stocks that you might trade, like Archer Aviation, ACHR was delete. So, it's been kind of held down, has been really participating. I don't think it's a coincidence, where the market's been going up and some of these deletes have been held down. RGTI, it's another one that's been kind of, held down a little bit. It was delete as well. So you just think Soundhound, SOUN, another one. So a lot of these stocks are up this morning. Look, all three of them. Lunar is another one. We just talked about that one. I'm long Lunar, full disclosure. HUT. Then you can go into the smaller ones like Space, SPCE. These are real dogs, though. iRobot, IRBT. Charge Point, that's like a 70-cent stock, I think now. So, but it's bouncing. A lot of these stocks they're all up this morning. Some of these, I was like 6 for 6 right there. So GoPro is another one. GPRO, that's a 75. I don't know if you want to trade 75-cent stocks anymore. I haven't looked at these things in a long time. But just keep that in mind. Sezzle, SEZBRL, and that's actually been going up. Yeah, it's a long list.
We did just get a trading halt in Big 5 BGFV. Gonna be news coming out on that one here shortly. Just a little heads up. Yep.
Probably thought it was it an ad or was it delete? I don't think they're probably posting that they were deleted.
I was wondering, I was trying to remember if there was like a deal for the company, because I feel like retailers like this, I don't know. They don't really halt them for like guidance. I don't think this company had like an M&A deal. So
what's the symbol on that one again?
It's Bravo Golf Foxtrot Victor, BGFV.
Remember,
so I'll let you guys know.
Remember this back in like 2020? It went from like $2 to like $40. Sorry, Brent.
It went to 40 in November of 21. It went to 46.65 when every single person was heading to Big 5 Sporting Goods to buy stuff
because they weren't doing anything else. We're in a lockdown. They needed to find sporting goods.
Yes. Yeah.
It was a crazy time back then. It was
real quick economics on the week. As I said, folks, 3.5 day week. The exchange deciding to close early on Thursday. What we're supposed to get on Friday is the jobs number. Instead, we're going to get that on Thursday, and then ADP on Wednesday. So move your schedule up a little bit on econ data. Coming out, I don't think there's going to be anything super revealing for the Fed to immediately lower interest rates by a basis point. And then earnings, like I said, very light. Constellation Brands is really the only thing we have. So analysts, they're at the Hamptons, so we're not going to hear too much. No, we did get some ratings today too.
You do typically on the Monday and Tuesday, and then Wednesday becomes a ghost town. So I would not be surprised. And we have, and just speaking of ratings here, quiet period ended for Circle, CRCL. So you have every analyst coming in. A few underweights in here, though, which, the stock has run so far. It's always interesting when they come out. So it's not getting the typical pop that it does when everybody comes out and initiates. I'll just go through them quickly. Bernstein, Start Circle at outperform. Barclays, and I just got to look at the price targets here because they're outperformed with 230. So, we'll quickly go through them. Bernstein, Barclays, Canaccord, Needham are the outperforms.
Oh, look at that.
We get 2 underperforms. Autonomous Research, I don't know Autonomous very well, and JP Morgan. JP Morgan gives her an underweight and an $80 price target. We initiate, got to read the JP Morgan note. We initiate coverage of Circle with an underweight and an $80 December 2026 price target. We see Circle as well positioned in the stablecoin market where digital cash use cases are quickly developing. Circle and USDC have an early mover advantage in what has been a winner takes most market, driving USDC market capitalization to $62 billion. Use cases include stablecoins as digital cash in the cryptocurrency markets and digital dollars as a store of value outside the U.S. This all sounds pretty good. We see use cases developing in cross-border and consumer payments. We think highly of the Circle management team and are confident in the outlook for outsized stablecoin USDC growth. All sounds good. However, we Circle current market capitalization elevated and thus initiate coverage with an underweight. So they basically said everything's going well at Circle, but the valuation is nuts, and they gave it an $80 price target. That's your summary. So stock obviously has come off substantially since Kramer said sell last week. Give Kramer some props because he has been all over it as of late. I've been telling you Kramer has been hot. I've been telling you the market has been responding to Kramer. He said to take profits in it last week at 226. Jim Kramer is now at 182. He also told us to buy a VAV at $190, and stock is now $279, and Goldman Sachs is recommending it today. I'm still long VAV. Yeah, they came out on the weekend and they recommended it with a buy. Initiated with a buy, AVAV.
What's the price target? I don't even know. It's
a little bit late to the party.
Wow.
I'm long a little bit as a trade. I'm also long in my long-term account. I intend to sell the trade sometime today. We initiate coverage, $301 price target.
Okay. What would we cover? Oh, I just wanted for you circle traders. I love the check back on this stock here, and open it to $65 level, got outrageously to almost 300, and you had a pullback, 50% retracement. You undercut it by a little bit on Friday, 175.60. So I think really important. I don't know if you're going to bolt right back up 200, 210, 220. But this is important. At least look at this. This formed 3-4 lows, same area, took off. Another 3 lows in the same area, took off in the stratosphere. So maybe let this settle down for a couple days if you're a big believer in the 50% retracement there for Circle.
Okay.
We do have our big 5 news. They are going to be acquired by a partnership comprised of Worldwide Golf and Capitol Hill Group. The deal is an all-cash deal valued at $112.7 million. That is $1.45 per share in cash. Penny stock here, but stock was halted. Just wanted to get that news out there.
All those dreams of getting your $40 back, you're not getting it back. You're getting $1.45. So when you chase stocks during a pandemic, and put them in your long-term account, sometimes they work for a while, and then a lot of times you got to take the money and run. You didn't. You lost it all on BGFE. So it's off the board at $1.45. I didn't really look this deep here, but in the chat they were talking about Goldman. Lacastor, hard thing to say, says Goldman's price target's 83. And I'm like, well, it's a neutral. I didn't even look at it because it was a neutral. But it's right. So they initiate. So Goldman initiates Circle with a neutral rating and an $83 price target. Why do you come out with the stock's 183? So you think it's going to fall 100 points and you initiate with a neutral? Huh? For real. I've got the note right here. I'm reading it. We initiate coverage of stablecoin issuer Circle Group with a neutral rating and an $83 12-month price target.
That will sound too
neutral. The stock's 183, Goldman. And you're initiating 83 and it's a neutral. That is a sell. If you're putting an $83 price target on a $183 stock, just have the guts and say it. They don't want to say sell. Wall Street doesn't ever want to say sell. An $83 price target. So they think it's way overpriced too. So just be careful with all your dreams on Circle because JP Morgan and Goldman think it's going a lot lower. They're a lot smarter than I am.
Folks, we got some news on Oracle here. Stock is moving. They are giving some guidance.
Oh, wow.
Oracle CEO plans to meet other Oracle colleagues later today. She will say Oracle is off to a strong start in fiscal year 26. Our multi-cloud database revenue continues to grow at over 100%, and we signed multiple large cloud services deals, including one that is expected to contribute more than $30 billion in annual revenue starting in fiscal year 28. That's your news on Oracle here this morning, folks. Stock trading up good $5 here on that 8K filing. I didn't mention that was out in the SEC filing.
And also we give props to Stifel. They upgraded the stock last night. So great timing upgrade for Stifel there. And obviously the stock is tacking on a lot more money here right now. Oracle moving higher, new all-time highs. I had this in the long-term account forever. Wish I wouldn't have sold it. And the stock continues to go high. So I guess the moral of the story has got to be more like Joel Elconin. Just never sell.
Oh my gosh, this is no technical analysis here in this one. You just keep your eye on the pre-market high. We're going to bring Ryan in here 1 second, Dennis. We got a little bit of a leak going on here, not much. We're 10 points off the pre-market high, which all-time high in the front month contract.
So we're going to bring on Ryan in 1 second.
There he is.
The best intro on the internet, right there for one of the best traders in the market. Well, statisticians in the market here. Ryan Detrick giving us all the info always here. How's it going, buddy?
Yeah, guys, that I love my intro. It's been about a month since I heard that. It kind of pumps me up, So
we got to bring you on more often. You can hear it every time. You actually were on CNBC. And you were on CNBC, and I'm like, wait. I paused like the STN room, and I like played the intro for Ryan Detrick, even though you were on CNBC. We played it in our own room for you when you were on, and then we all listened to your interview. It was awesome.
So, I'm actually on CNBC in a couple hours. I think I need to
we'll do it again.
Have them play that before I come on. That's funny. No, I'm down in South Carolina at a friend's house for the holiday week. So wish everybody a happy holiday week. So hopefully my sound and everything's sounding good.
We're in South Carolina. We're in South Carolina.
Tega, South Carolina, just south of Charlotte. We lived here for 6 years, so we're.
Oh, that's right. Yeah.
Up in Ohio now, where I'm from originally, but back visiting. So just I said, I can join you guys and talk a little bit. It's my bit this and CNBC in a couple hours, and I'm done for the week. So hopefully everybody has a fun week. But as usual, I've just got a bunch of stuff to share. So you guys just want me to share away and let's get started.
Yeah. Got it, man. I'm gonna go get some coffee. I'll be right back.
Yeah. I'll just start talking.
I'm not going anywhere. I'm watching.
Here we go. All right. Just give me the okay, Joel. You hear that, or Dennis? You guys see that? I mean, we good?
Bringing it up right now.
All right.
Hang on. I got you.
All right.
There we go.
All right. So again, fun little. Everyone saved their fingers this week. There's a bull and a bear enjoying together. Fireworks. How sweet is that? With all-time highs, that poor bull. That bull's winning. That bear's pretty beat up, but that's all right. We'll kind of jump into it. So the first couple I share, I think I literally have shared with you guys for well over a year, but we'll do it some more. This is a post-election year, as we all know, going back the last 10 cycles. That's 40 years to 1985. You see it there. That's the blue. These years have been pretty strong. And yes, this year had the near bear market. This year had all the volatility. No, we did not expect a near bear market. I came on with you probably started the year saying we could see a 12 to 15% correction because we didn't see one for like 2 years, but it happened. But still, these big picture things are things to think about. So 9 of the last 10 years, the S&P 500 has been higher in a post-election year. Just little tidbits, little clues, I think, that said maybe this year could be okay. And we came into this year expecting a 12 to 15% gain on the S&P 500. We're overweight equities. My team manages close to, who knows, maybe after today it'll be $5 billion, but close to $5 billion. We've been overweight equities all year. And trust me, that was not easy in the second week of April because I'm not necessarily a trader per se, more tactical investor with the money we run. But the reality is we never lowered our targets. We never said, the world is going to end. We thought reasons. And I came on with you guys back in April saying this doesn't seem right. It seems like we're going to snap back in a big way. And fortunately, clearly that's happened. This is one thing. Now, here's one I've shared a ton. It's not a shock to us. The first quarter of a post-election year was weak. No, we didn't think it'd be quite this weak, but it is what it is. But check it out. The second quarter is usually pretty strong. So we do not blindly ever invest in these things. I'm just setting up the table, for kind of some ways that we look at the world here. So the way things played out, yes, the third quarter is not that great. Fourth quarter is strong. I mean, this isn't perfect by any means, but I think the key thing was the year after 20% gain. The first quarter, last 20 years, the first quarter post-election year, all the up 70%, over the 2 years. All these bears are making fun of bulls in 23 and 24. All of a sudden, mysteriously, were bullish in their outlooks. It's like, what's going on here? It was time to shake that tree. We got that, and a lot of those bulls. I don't know what you can call them, bulls or bears. A lot of those strategists that were cutting their targets. Now we all know they're upping their targets. It's the game that's played, yes. But I think this shakeout we saw earlier this year wasn't a surprise at all. It's probably necessary. I heard you guys just mention Oracle. Didn't know that. I looked. Yeah, up 4%. PreMarket. There you go. This is a big whoops. Remember, we were told tariffs are supposed to cause massive inflation. It's supposed to hurt earnings. Now, I get it. A lot of tariffs are on pause and this and that. But the reality is all that fear, everything we were told. This is just from this is from who's this from? FactSet. This is from FactSet. Check it out. A lot of forward guidance. A lot of companies have had some good things to say in the second quarter when it wasn't supposed to be like this. So why are we hitting all-time highs? Is it the Fed doing this or that? I mean, I think it's earnings. I mean, we're hitting all-time highs in earnings. All that negative sentiment that we saw, that's a positive. And here you go. So big whoops to everyone who said how bad it was going to be. This year, I'm assuming we're going to finish up. Today's the middle of the year, up about 5% for the year. So I don't think we're going to be negative by end of today, year to date. This will be the second largest called slingshot year we've ever seen on the S&P 500. You can see they're down at the lows on April 8th, down 15.3%. Only 2009 was down more and then was positive at the middle of the year. So we've had obviously years that were down more the first half of the year, but they didn't come back to positive. So this is what I'm taking a look at. And you can see those numbers. But I think what I think is important is if you don't have a recession, which we don't see a recession. I mean, I know the economy is cracking some places, housing, labor market, but is it going into recession? We don't think so. We just don't think so. And you can see there what happens if you don't have a recession. Yeah, small sample size. I get it. But that slingshot is engaged. And I think this is still a positive the second half of this year. I guess it'll be in 2 weeks. We'll release our mid-year outlook, without giving everything away. We're still pretty optimistic, right? We still think the U.S. is going to do. We think the U.S. is going to do pretty darn good. Come on, back in, I guess when was it? On March 3rd, we made some pretty big trades with the money we run. Still over at equities. We got out of some U.S. We got into some around the globe, mainly Europe. Actually, this is on March 3rd. This is before all this stuff happened. So we said this is a global bull market. Obviously, listeners of this show know that. So I think people need to remember you don't just need to be a Mag 7. There's so many other opportunities. But we think the second half of this year, the United States is going to play catch up with the rest of the globe, and it's going to be positive for U.S. investors. So we've got 4 all-time highs. Just a nice way to look at it. Yeah, today might be obviously a 5. It looks like, but just the reality that we hit a new all-time high after February 19th. They haven't had one since February 19th on a closing basis. So what does it mean? Again, I work with financial advisors every day and their clients to kind of take a little bit more of a big picture view. Don't be scared of new all-time highs. The S&P 500 became 500 stocks in 1957. All right. 1,245 all-time highs since then. And those are little. Wow. If you look real closely, you'll see there's a lot of them. Yes, they happen in clusters. Yes, they happen for years. Eventually, we'll have one that ends, and then we have a bear market. We don't think that's today. Then you can see it's 7.2. It's about 7% of all the trading days since 1957 have actually made an all-time high. I mean, that's kind of wow. One every 14 trading days. Okay. So that's about every 3 weeks you hit an all-time high. And yes, we can obviously look at that all the same. Sometimes you go a while without hitting one. But I think the thing we're really stressing is new all-time highs tend to get more all-time highs. And that by itself, there's always reasons to be worried. I mean, valuations are a little high. There's still geopolitical concerns. The Fed, are they behind the 8 ball? We think the Fed should be cutting. We've been saying that for a while. They're not. I mean, there's always worries out there, but new highs and scared of heights, we don't think it should be one of them. I do this in just because it's fun. This wide breadth thrust. Everybody made fun of it. I remember this. Like, it happened, right? And it's a little wonky how it works. It's when you go super oversold, super overbought in a short-term time frame. I literally shared this with you guys, 6-7 weeks ago. Since April, I guess it was April 25th. So that triggered April 25th. S&P gained 7%. I mean, since April 25th, think about how things have done. Obviously, straight up pretty much. But once again, this wide breadth thrust is strong, and you see it there 6 months later, a year later. Yeah, pretty solid returns off to another strong start after that. This is a neat one. I call this the Rocky Balboa market, meaning
nice.
If you're down, what happens the next day? Because Rocky got knocked down a lot, as we all know, but he always came back. I mean, even in Rocky 1, right? He did it. Apollo Creed didn't knock him out. He knocked him down a few times. He didn't knock him out. And then in Rocky 2, Rocky came back and beat him. So this is the Rocky 2 type of movie. I like Rocky 4. I'm a Rocky 4 guy.
Rocky 4 is the best one. Drago, you can't beat Drago. If he dies, he dies.
You think about it, like, I love my intro to this, but the Rocky 4 montage of my intro, I don't know which one I love more. I mean, it's hard to say. They're both really, really good. But anyway, let's get back to it. So, I mean, up 0.32% the day after a down day. Yes, this is, I guess you could say, skewed by the 9.5% bounce we had on April 9th. I get it. But even if you take that out, we're still pretty solid. I mean, we've had some down days and you bounce right back. So this is the Rocky market. You can see is one of the strongest we've ever seen. Yeah, it'll probably come back to the trend as the year progresses. We get it. But just a neat way of showing I think the bulls are in control. Another thing we've talked before, I know I talked to you guys about this. Year 3 of a bull market can be choppy. Year 3 started obviously October of last year because this bull market was October 2002. And these are just a bunch of bull markets. Year 3, again, it is what it is. Tends to be choppy. This is one of the things we listed 6 months ago in our outlook that we produced in early January, saying, listen, it is year 3. Maybe it's going to be choppy. Maybe it's going to be frustrating. Perfectly normal. Then once you can kind of get through, why is year 3 choppy? Because years 1 and 2 are usually up a lot. We're up like, 20% back-to-back years? Maybe year 3, at least the first half, should be choppy. perfectly normal. And that's where we are. I think we're past that choppy stuff. Now, this is really cool. Well, I'll bounce around. I mean, again, sample size of 1. I get it. You know, people always, oh, sample size of 1. But still, check out the lows off the March 2009 lows and what it looks like this one. No, I'm not saying this will go 12 years, but I'm just saying, you know, we've seen some hiccups in year 3 before, and then look at this one. Here it is again. This is the 80s and 90s bull market. You know, again, year 3-ish gave some trouble. So again, just some things to think about where we are. Now, here's a bunch of numbers, I'm aware, but it's showing all these different bull markets we've had since 1950, and year 3 is up, what is it, like 2%? Yeah, 2.1%. And that's assuming it even makes it to its 3rd birthday, which in this case would officially be October of this year, and we think it will. But again, I think these are just things to think about when we realize we're in a structural bull market. Come on, you for a while saying that, but year 3 to be a little frustrating and choppy, you know, near bear market, shake everybody up. Yeah, maybe that's the way this is working because we've seen that before. And I just love that. And by the way, one more time on this, we had that near bear market. Isn't it crazy? 15 years ago, 2011, 15 years ago on the first U.S. debt downgrade. We had almost a 20% drop. Boom, 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 real fast. August 2011. For those of us that were there, that was a really frightening, scary time. And now we're getting U.S. downgrades, and it seems like we just don't even care because we go forward. A couple more from me here. If down 20% is a bear market, and I get it. These are just the definitions. I just use them. Sure. Then up 20 could be a new bull market. Now, no, technically we weren't down 20% on a closing basis, but intraday, if anyone remembers April 8th, we were down 20% intraday, maybe even April 7th, like 2 days in a row. We clipped it, but never officially closed down. But up 20%. What happens next? Just very simply, you can see on your screen after near bear markets and all the bear markets. And so when I go back to, I guess this is World War II, higher, I believe it's 15 out of 16 times a year later. Wow. You can see the forward returns. Again, that's after you're up 20%, which in this case triggered what day? What do I have here? June 6th. Okay. So on June 6th, we officially triggered up 20% on the S&P from the closing lows on April 8th. And you see it there. All those other times you didn't roll back over, usually didn't go into recession. The smartest indicator we have for the economy, in my opinion, is the stock market. The fact we're hitting all-time highs here in the middle of the year probably says the second half of this year is going to be a little bit better than everybody's telling us, and that might be better for the U.S. economy. This is a neat one. What do I have here? 2-month rolling returns. These are 2-month rolling returns going back in time. This is something, again, when I work with advisors and their clients, we point this out. If you sell, okay, it's more like a buy and hold investor, honestly, for this. But if you sell because of a couple bad days, like a 10% drop after 2 days of Liberation Day, or Obliteration Day, whatever you want to call it, you're going to miss the bounce because the worst and best days, best weeks, best months take place really, really close to each other. We were sharing this when that was on the right at the bottom part, and now we've had the 20% rally in 2 months on the flip side. So I think it's just really important to remember, even for more of the short-term traders who listen to this show, volatility happens in clusters. Those bad days, you might have some really big up days. Like most people get that, but it's good, I think, to really take a big picture look. So what does up 20% in 2 months mean? Very small sample size. Again, like I say, if there were more examples, I'd share them, but there aren't that many. We were just up 20% off 2 months. That's so when I say 2 months, it's 42 trading days, 21 trading days, approximately one calendar month. So 42 trading days, 2 month return up 20%. Again, it is what it is. Check out those returns going forward. Up 30%, up 31% a year later. Yeah, I don't know. I'm not saying we're going to do that. I'm just saying when you're up 20% in a 2 month period, that's a buying thrust. It's buying pressure, whatever you want to call it. I say it's like a beach ball under the water. You let it go. Once it gets going, and I started saying that example back in late April, saying, listen, that beach ball is starting to go up. Get ready for a bounce. And we had a 6% rally in May and a 5% rally in June with a day to go. Not shocking to me, honestly, when we were seeing some of these things trigger, but up 20% in 2 months is a good thing. Something for everyone. Here you go. This is for bears. We did go a while without an all-time high. I guess it was about 4 months. You can see here, I look at all the times between 4 and 12 months without an all-time high and then finally made one. What happens next? Well, honestly, a year later, returns aren't that great. I mean, I think that's the best way to put it. I mean, believe me, we're still structurally bullish. I think a year from now, we're probably up close to 15%. From this second to a year from now, we think we could be up to 15%. But this is one that says, maybe don't expect a huge rally. But again, just something to think about. We did go a minute there without an all-time high. I got just a few more. July bringing the heat, and it is hot. It is hot everywhere, isn't it? But July, just from purely seasonals, has been up 10 years in a row. Second longest win streak ever for the S&P in July. 1949 to 1959 was 11 years in a row. But July is the best month the last 20 years. Second, and this is wild, it's the second best the last 10 years. You're like, wait a minute. You just said it's up 10 out of 10. Yes, November on an average return is up even more than July, even though July's been up 10 years in a row. So think about that. But in a post-election year, July is the best month. Long term, you can see July's strong. Okay, but here, what I'm going to jump forward for a second. What about when you're up in May and June, like we just were, right? Well, July actually does better. So when you're up the normal week months of May and June, July does better. But here's what's really interesting, I think, for everybody out there. Check out the next 6 months. The next 6 months, I'm not exactly sure how many examples there are, but only once out of, well over double digits, only once was the rest of the year, so that's starting July 1st to the end of December, negative when these 2 months that we just had a really big gain in are positive. Because usually they're not that positive. Usually May and June aren't that great. So this year, again, I'm an old school John Murphy person. I have a CMT behind my name, not a CFA. Message of the markets. Are we listening? And I've been sharing these little clues for a while. Why we're still in a structural bull market. No, again, we didn't see 20% drop after Liberation Day, but hey, it happened, and that's where we are now. I'll go back here. This is kind of cool. Just way of showing it. Win streaks for July. I mean, I get this is the perfect example of the red and black with roulette, right? You see, oh my goodness, it's been red 9 times in a row. It has to be black. No, it doesn't. I mean, it's still the same odds, right? Now with July, you can look at different things, and people say, why is July strong? I'm going to give 2 reasons. I don't know. I want to be clear. It's vacation season, right? So you have lighter volume. When there's not a lot going on, you tend to upward bid, but it's also earning season. I saw on July 15th, those banks start reporting. I wouldn't be shocked at all if all those worries again were shown once again that the world's not ending. We have some solid earnings the second half of this month, next month, which leads to higher prices. I guess I am done. Did I skip anything? No. Okay, yeah. I guess I am done. I guess that's it. Wow. I actually it seemed like I went a little faster than normal. I don't know. I'll stop sharing. There we go. What'd you guys think? Yeah.
I think I don't want to be bearish. I think I'm scared to be bearish, especially with that July stack coming here. Yeah. I mean, I'm not going to be the person that's going to say 10 times it's going to be the 11th time's not going to be the case here. So I guess new all-time highs, and the party just continues here. Now, nothing is 100% of the time, but holy cow, Ryan. They gave me one side if I wanted to be bearish, but I think I just got to stay on the bull train here until Ryan gets us some stats and say, hey, it doesn't look as good here. And I mean, you've been all over it. The last 3 years, Ryan, even 2022, a lot of people, were doubting, the little rally that we started. And you were saying, hey, this, market, has a potential to bounce, because 2020 and 2021 were really ugly. And the beginning of 2022 wasn't pretty either. So, you were all over it. So I want to give you credit where credit is due here. But man, I don't know. Like, it's hard to be bearish here, Ryan. So.
And maybe that's why we should be. Because I was here, I'm hearing you. I use just the internal indicators, like CNBC can't have me on enough. When I was bullish in late 22, they didn't want to have me on. That stuff you guys always had me on, but that stuff worries me a little bit. But I mean, I work with financial advisors and clients, and I've said that a few times. Like when I travel the country and talk to clients, I'll just say this much: it's not like people are saying how good's it going to be, how high we're going to go. I mean, you look at the AAII sentiment poll, and I get it; it's the same people, it's a small sample size, it's flawed. There's about the same number of bulls and bears. You look at some of these other various sentiment polls, we're starting to see outflows, right? The mom and pop, as we call them, actually were the smart money back in April and May. They were adding, they're starting to get a little leery after this 20% bounce, rightfully so. So we're just not seeing over the top optimism, and sentiment's a very tricky thing. I think it works way better when you're down versus where's the ultimate peak. But I'm not seeing signs of over the top optimism. I don't know if you guys are, but when I talk to people, it's there's still a lot of not scares, but a lot of concerns, I guess is the word I'll say. I mean, this time a week ago, we thought World War III was going to start. Oh, by the way, how about last week? So last week we thought World War III was going to start. We had a really good bounce on Monday and Tuesday. Wednesday was the smallest down day in the history of the stock market, down 0.000033%, the smallest down day ever. And then on Thursday, Friday, you're up. Imagine being a bear, all fired up because all the drama we were seeing, and then all you got was the worst down day, or the smallest down day in the history of the stock market. And the other 4 days are up. That's tough sledding, guys.
It is.
Okay, Ryan. You said you travel the country, right? Talking to clients. Do you have any international clients?
Mm-hmm. Well, an RA, no.
Okay,
we have to have U.S. citizens.
So I just a lot of great statistics here and everything, but what about non-U.S. investors in our
Mhm.
market.
Mhm. Yeah,
Like
well,
Dennis, his returns. I mean, the buck is getting absolutely demolished here.
yes.
So
Yes.
at what point, is the falling dollar, right, going to have an effect? Because if you're an international investor right now, you're not all, it's not all great news here. You're maybe down on the year with the dollar depreciation here. Is that just we just sweep that under the table? We're all U.S. investors. We live in the U.S. We spend
Yeah.
U.S. We just need to forget about that.
Well, I wouldn't forget it. I mean, listen, the money we run, if you think about it, all equity portfolio, about 30%, if you look at benchmarks, about 30% is international, and that's 20% developed international, 10% EM. I mean, that's kind of, and we, being Carson Group, have had probably a larger international exposure most of this year. Before everyone started realizing how good it was. I work with Sonu Varghese. Probably a lot of listeners know Sonu. I do a podcast with him every week, Facts versus Feelings. He was extremely optimistic on Europe in the first quarter of this year, because we saw some of the fiscal things that Germany was doing and some other places, and they're actually doing some things. I mean, listen, budget deficits aren't good. Go back and look at history. What happens with countries that have like a negative budget deficit with GDP, like positive things, right? Stock market tends to do better. I mean, there's a reason I think the Israeli stock market is doing as well as it is, because again, they're spending a lot of money. And I'm not saying spending money, I'm not saying budget deficits are a good thing per se. I'm saying from an investment's point of view, historically they are. I don't think it's a shock that in March of 2003, when the terrible war in Iraq started, that's when the tech bubble 3-year bear market ended, because our country, U.S., started spending a lot of money, went into budget deficits, and all of a sudden the market started to rally. So those are some things to think about. But just big picture, I mean, there are a lot of opportunities globally. We still like developed international over EM. I've said that all year. We're still just not that warm and fuzzy over China. Fits and starts. Don't really trust their growth. It's hard to trust communism, to be honest. But we think developed international is great. And I actually had lunch last week with Todd Sohn. I don't know if you guys know Todd, but Todd's over at Strategist, real smart guy. Strategist group, they're starting to get a little more warm and fuzzy about Japan. Now, we're not yet, but that's that developed international. Maybe batons, what I'm trying to say. Baton gets passed to Japan. But I just think, globally, it's important to remember there are opportunities. And obviously, that's why I like your show, because you guys get into this stuff and your listeners know this. But when I talk to most people, they think, oh, I just should own Apple. And listen, you probably should own a little bit of Apple because it's a great company. We believe in it. But from an investment's point of view, there are so many other opportunities. 16 years, everybody knows the U.S. outperformed. U.S. outperformed Europe by a pretty wide margin. We think that's changing in a big way here. And we think it's going to continue to see more outperformance from other parts of the globe. I mean, yes, because we're an RIA based in Omaha, Nebraska. We have a lot of U.S. exposure. The U.S. still going to do pretty darn good. But for the first time in a while, there's opportunity. And you mentioned the dollar. I'm sure you guys talk about this. This is like the worst year the first 6 months, like ever, like since Bretton Woods, 1973. I mean, this is a terrible first 6 months. And as we all know, this time 7 months ago, all we heard was how strong the dollar is going to be. All we saw was the economists shooting $100 bills flying out in outer space, talking about the envy of the world. And how are the economists covers now? I mean, that contrarian in me, Joel, does wonder, though, with the dollar doing as poorly as it is, and everyone's realizing it now. Maybe the dollar's finally going to get a little bit of a bid. But also the truth when it comes to currencies, this has been a slow and steady drip lower in the dollar. I wouldn't say it's crashing. I mean, over the 6 months, it feels like it's crashed, but it's been slow and steady. The long as I've done this, it's the volatility in those currency markets when you tend to have more trouble. So the low, that's what it is. Dollar's having its worst start ever. Yet the U.S. is still at 5% on the year. For equity markets. I mean, so things are doing okay. Globally. I mean, literally every stock market's higher. Like literally every stock market in the globe that we follow are like 50 are all higher. Okay, not by a lot. The U.S. is lagging. Taiwan is lagging. India is lagging. India and U.S. led the last 2 years. So maybe it just makes sense that baton gets passed around. But it is a global bull market. And I think that's what we've been stressing for a while. The other thing we've been stressing is when in doubt, diversify it out. We have some managed futures. We've had a 3% allocation to gold since April of 2003. Not because I'm some big gold bug. Yeah, that's up like 70% or something like that. I mean, that's done really, really well in our tactical models we run. It's not because we're gold bugs. It's just saw some reasons, think the dollar would do this and thought gold could do well. That's in the regional bank crisis. We thought it made sense to have some. So the money we run, we've done really well, and we've got a diversified portfolio, still overweight equities. Yes, but there's opportunities out there. Yeah.
All right. If you can't beat them, join them. Diversity.
Yeah.
Ryan Detrick, Chief Market Strategist at the Carson Group, joining us on Pre-Market Prep. Always fun. We'll be down you up in August. Enjoy your time off.
Everyone have a great summer. Get some vacations. Stay cool out there, and let's keep this thing going. But, guys, I appreciate it. Big fan of what you do, and I'll be back next time. Thank you for having me back.
Okay.
Thanks,
All
Ryan.
right. Here, 9 a.m. Dennis went a little bit long in the tooth there with Ryan, but
awesome. I go all day with Ryan.
How can you not do that with Ryan? That's
awesome.
That's one thing makes
awesome
it special
stuff.
here.
And I mean, just the stats he brings, and you just like, I've been saying the second half I think is going to be tougher than the first half. But you see stats like that, and you hear, where we are with Trump, talking about the tariff deadline and saying, well, it's a soft deadline. So all of a sudden we're like looking, the taco trade there too. So it's hard to find, I've been saying this for the week. I'm struggling to find the bear thesis, and it will come out of nowhere. There'll be something that happens, some crisis that happens or something. But, at this point in time, I mean, I was calling for all-time highs in June. We got that. I've been calling for a rougher second half. I'm putting pause on that right now. Right now I'm putting pause on the rougher second half, not just because of Ryan's presentation, but just because I'm not seeing that initial catalyst. Now I'm ready. I mean, if all of a sudden, something, corporate earnings start to struggle, tariff uncertainty, but the tariff uncertainty isn't as big of a problem because simply Trump has not, is come down so much on those numbers, and he probably going to continue to come down. So it's tough to find the bear thesis here.
How about a negative catalyst like a war? Bombing Iran. Oh,
well, I mean, that's
already had that.
Went up. Yeah. So, I mean, it's hard. And Gabe's asking me in the chat, do I change my views of a rug pull? Yeah, I think you do. It's nice that we've been bullish the whole way up and playing at the long side. I had a fantastic month. My long-term accounts at all near all-time highs, but my short-term trading accounts have been going up and all-time highs simply because the trades have been awesome from the long side. I think I'm going to continue to play it until I see, and again, keep listening to the show. We can change our opinion. Your job as a trader is to change your opinion. That's your job, folks. So, I mean, people are like, oh, Dennis changes his opinion too much. Well, no, it's my job. I'm a trader. I make a living trading. It's my job to change my opinion so I can do market timing. If I didn't change my opinion, I was just forever bullish. I'm not a market timer. I'm an investor then. So my job is to change my opinion. At this point in time, I'm staying in the bull camp, and we'll let you know when I change my opinion.
Okay. All right. Long in the tooth there, 9:02, wrapping it up. We didn't get, we'll cover Tesla. We'll cover all these ratings over here in the STN room. Tomorrow, the cow guy makes his appearance. We had bet him back in April.
Oh, nice.
So yeah.
Intern will be happy. He misses the cow guy.
Yeah, he gave me a nice list of guests for the STN room. Thanks, folks. Enjoy your Tuesday afternoon here. Pre-market prep signing.